Okay. All right. Officially, good morning. Welcome out to the Market Watch Group. This is our weekly opening bell. So Sundays we talk about the posture of the market, our overall assessment of market conditions. Our market posture is how do we see the market overall? Our trading posture, and you'll see the distinction between those in the trading plan, is what are we doing day to day, right? So market posture is the broader perspective. Trading posture is the more granular day to day activities. So we accounted for the broader perspective yesterday. If you missed it, I sent the email and I just realized that I hadn't posted the recording on the announcements. I'm playing with if I want to have a recordings. I think Steven maybe suggested that if I want just a pure recordings channel, I start to get nervous. I'm open to feedback from everybody. I start to get nervous a little bit about channel overload. We do a lot of different things, though. We have a lot of resources, a lot of different recordings, things for right. And so it's been hard to keep it. I've tried to keep it pretty tight. Yeah. But as you look at what we have, do you feel overwhelmed by the channels? Would it be okay for me to add one more that would allow me to post recording links there? Give me your thoughts. This is for you. Like, you pick. You pick. I'm not picking. So, yeah, I'm getting some no's. Okay, that's great. Okay, love it. Good feedback. Okay, I'm going to keep bouncing ideas off of you guys because even as we're, I would put us at, the overall structure of what we have is mostly in place, but there's still tweaks. We are constant improvement people here, always trying to get better. So I would be remiss if I didn't do the same thing with our group that we are trying to do with our trading. Awesome. Okay. Weekly opening bell. I am Scott. I will be your host. Don't forget, we are not brokers or advisors. We don't give advice or recommendations. We're here, educational, illustrative purposes, collaboratively working as a group. Today's agenda: opening futures and news. Things look positive. We never stop to be like, oh, we think we did so great. We stop to say it feels like we're seeing things correctly. When it doesn't feel like that, we're going to stop and quickly be like, what are we missing? Let's adapt as quickly as we need to, right? So that's one of the things that we're doing here. It's okay. Thank you, Miguel. Miguel says he has it also on YouTube. It's sufficient. That's what we're looking for the backup solution. Sufficient. Do we accept a lower quality? Yes. So thank you for telling me that it's up and running. I wasn't going to check until later because it supposedly records as well, but it doesn't record as good either. So I think I'm just going to delete it and then post my better recording, but I'll have a backup if I need it. So anyways, thank you for the feedback. The futures look good. Looks like the market's going to bounce. We actually said, hey, we're thinking there may be bounce potential happening here. What would we be willing to trade into that bounce? What would our expectations of that bounce be? Right? Does that bounce go and hiccup a little and then go? Does it V and just take off? Or does it go and stall and start to turn over? If you've missed the last little bit, watch Sunday, watch Friday. One of the things that we're doing is talking about this market relative to the last couple of times that we've had these types of similar price action patterns. So we had a consolidation in April, late March, early April, about a 5%. Prior to that, it was the correction. And a correction is a technical, which means it's 10% high to low, and what it takes. So what are the characteristics? What would make us think it's one or the other? It's not clear now. That's the point. We have to trade now, but it's not clear now. Have you felt that? Like am I putting voice to, right? We have to, if it's going to V from here, if you're not in a trade now, you're missing the V. I want the V if it's going to happen. If it's going to go up and hiccup a little, there's bullish potential here, but there's also the potential that it's going to go up and it's going to crap out, and this could turn into a correction. Are we willing to trade into that? If you're new, you might think, gosh, I don't know if I want to, maybe I'll stick to paper for now. Great. Okay. No problem. There's no pressure, but it's important that you are correlating risk and decisions to market conditions right now. Right? Okay. Let's talk about that. We'll look at the economic calendar and the posture. We'll look at mindset for trades. We put trades on Monday or on Friday. There's a good chance you have trades. We're bullish still. Our posture has diminished, but we're still bullish. And the same exact thing happened almost exactly back in April. And we want to be ready to move quickly back into bullish if the same result of April's activity happens now, because it was very bullish coming out of that. Remember one of our sayings that we reference here: don't fight the Fed. And the Fed is lining up, it seems. I'm wary still. Everyone thinks that this week's meeting on Wednesday is going to tee up the September cut. I think it's dangerous. I think that the media, the financial media, picked up on one indicator around the same time that became their indication of employment, of labor market weakness. I think the labor market looks just fine. And it's putting some pressure on the Fed, but I feel like the election is more of a pressure. Like if I was the Fed and I'm thinking, okay, here's the market begging for a rate cut again. The same thing happened like in November and December. Everyone's like, oh, we're going to get rate cuts. And then the same thing happened in March and April, rate cuts. It's that Fed crack. And it's funny because I got swept into it. But this time I feel like I'm not, and that means it's probably going to happen. So I just don't think so. Still, I think it's going to be hard for the Fed to do it in September, but it increasingly looks like that's what's going to happen. And if that's what's going to happen, the market's going to love that. Whatever we have going on absolutely feels temporary based on all other conditions right now. That's what I'm saying. You'll hear people making like political, like, oh, the market's pricing in that they think this candidate's going to win or this. That's 100% bullcrap. I almost said a bad word. The market doesn't care. Just doesn't care. The market doesn't like uncertainty. If there's uncertainty, the market will respond negatively. One of the things I've always tried to convince people, and this is an important conversation to have in coaching, is do not let your politics influence your trading. It's funny. I could go back and count the number of elections that I've traded and coached through where whoever won, the other side's like, this market's going to go to the crapper because of the other side won. Nope. If it goes to the crapper, it's for someone else. It's not because of that. Okay. We'll look at the opening range here. Got a couple of minutes. We'll look at our opportunity list. Where are our opportunities coming from? For me right now, it's industrials. We saw as you started to see money pulling out of technology, which we saw, where did it go? That's our question. Where did it go? If it left chips, if it left software, if it left communication services, where did it go? Well, it never left financials. Financials have been like they moved into a third leading sector position pretty early, and they've stayed pretty strong. So financials, industrials, that's the number one place where we can see it. We see it in our watch list. We added a number. If you missed it, I can't remember which one it was. I should probably try to label our foundations classes with like a general topic. Like, what did we do? Built a trade or searched for sectors, or that seems like it would be helpful. I've got to get better organized, like, because we have good stuff, but it's a lot. So it's overwhelming to try to go back and parse through it sometimes. I'm trying to organize our content library in a few like curated paths of like, hey, these presentations together make sense. But yeah, okay. And trading plan, we're working in our record keeping section right now. So here's the question. Do you have an analytics? Do you have a spreadsheet? Do you have something that you're using for record keeping? That's the big thing right now. Get that in place. Our record keeping, our spreadsheets, which can be found in the downloads channel. Markets open. In the group downloads channel, you can find a blank copy of the trading plan to download. You can find a stock log or an option log or both if you're doing a little bit of both, but keep them separate. You can write all the different, the market posture, so you can start keeping your own. You can find the historical posture, so you can go back and find what mine or ours I is, and go from there. All right, let's dive into it. Let's move out. Okay, so you can see I've got my Heiken Ashi candles on, right? I've got my Heiken Ashi candles on right here. And you'll notice that that's exactly where we were right here. This is the market we're correlating to before I go in. This is that was 5%. That was back in early April. We just got like 4.7, I think. I'll have to measure again. Maybe I wasn't paying attention completely. But, I mean, the correlation here is pretty similar. And then all of a sudden, you got this first little bit. And there's our first little bit. And you can see that it might go and hiccup and go and hiccup and go. So there still could be some uncertainty here. Could be. It could also V. What would a V look like? It would look like straight into the next set of these Heiken Ashi momentum candles. Bam. Just takes off like one of those. That would be a V. Now you can see why I call it a V, right? Because it makes a V pattern. Okay? So that could be what happens. Or we could have uncertainty like we had back here, but then it ultimately moves into its next bullish path again. Or, so we have A, B, and C. Now, I'm leaning more towards A, which is a repeat of last time. So, if I put trades on, I need to be patient with them if there's a little hiccup, or else I shouldn't put them on. But it could look like what we had here, where it goes up and then it comes down a little, but it doesn't do too much. And then it just goes up and then down and then boom. So during this, yeah, if you get shook out of that and then all of a sudden the market takes off, you're going to be thinking, what was I doing there? Remember, we're still bullish. Our market posture is still bullish. But this window also carries with it one last possibility. And that last possibility, we have to step back a year. And you can kind of see, right? We can get these upswings right here. And they're not small. I mean, they're 2%. But just keep in mind, does it get back to the previous high? That's where you see the weakness there. We actually were looking for this right here. I bought puts right there, because it looked like it was turning over at a lower high. I had puts on for that. But as soon as it reversed out of that, I'm going to close those puts and make sure I have my bullish stuff on. Those puts were a hedge, not a speculation, a hedge. A hedge for the fact that I put bullish trades on back here. Not as much, right? Not as much. So I'm going to do the same thing. If I'm putting bullish trades on here and this market goes up and it starts to turn over, I'm not going to panic or bail. I'm going to hedge. The hedge is what's going to allow me to carry through a little bit of this. I would love for the hedge to be wrong. If the hedge is wrong, that's best case scenario. If the hedge is wrong, everything else is going right. That's what we're kind of preparing for here. Does that make sense? Let me know if you have any questions about that. Let's pop into our posture real quickly here. So we were a 5. That was a 0.75 drop, and we said, okay, that has us taking note, but we're waiting until the next week. Well, the next week came, and we dropped again. Now, if you notice, we were a 5 or a 5.75 through June, all of July and June, and back in May, all the way back until here, where you'll notice in April, we dropped from 6.75 to 6, 6 to 5, 5 to 3.5, and then we stabilized. So that one had a little bit longer. We didn't actually see as much weakness this time, but we've had that same drop. We dropped to about a 2.75, then a 3, and then it started coming back. What happened there? We never dropped out of bullishness, just like right now. We haven't dropped out of bullishness. First and foremost, we have trends in place, both short and long term. Volume is concerning. The sellers definitely made a bit of a smash and grab. Okay, great. We acknowledge that the sellers did that. Okay. The major market looks amazing right now. Like money is flooding into small caps. Still. What does that mean to us? That's the third. We've been watching the Dow and the small caps, and we're like, this is a race between defensiveness and bullishness. If the appetite for risk swings to bullishness, we're going to see money flow into small caps. People are like, all right, let's get going. Small caps, we love them. They can go 30, 40%. If the market's bullish, no one looks to flood into Dow components, right? They move into technology. They move into small caps. That's the appetite for risk. That's why we do major market. That's strong, very strong. Sector rotation. Even though we lost a little bit of ground in technology, it's still a leader. It's just gone into a correction. But we are adding more growth sectors, financials and industrials. So the VIX also got shook. It got shook, but it's still bullish, mind you, right? Also, let me move this chart back to standard candle. Here is the VIX. So, okay, and even here you can see we're actually up a little from Friday. This VIX is holding on to some volatility, and it's easy to be like, there's a lot of volatility here. First of all, let's get perspective once again. Okay, I'm going to go 3 years. This is our high relative to like what we've been seeing. You'll notice it's not that bad. When it's in the 30s, it's bad, right? But then let me give you one more look at perspective, just one more. It's funny that I have to. It's so crazy to think. It's all I process the timing of events sometimes through stock charts because. Let's just say, for example, our last event that we would anchor to, obviously, is the pandemic. And it's just interesting to me now that I have to switch my chart to 5 years. I can't get it on a 3-year chart. I got to go 5 years. And there's that nasty pandemic. So now, that's where we are. It's like that. It's like that video on YouTube where it shows the Earth, and then it shows like bigger and bigger things, like a bigger planet, bigger sun, and then you like realize how small our sun is to other. Perspective. It's all about perspective. This is not that high. In fact, let's come back over here to 2019. Real bullish time. Right? A real bullish time right before the pandemic. What did a spike look like? Oh, look, it got up to not that high, 20, low 20s, but it mostly was down here. And you'll notice there's our spikes, but we're mostly down here. This is a great market. We should be looking at this as a great market. We should be looking for it to, until we see something real nasty come. I'm expecting for it to stay strong, to continue in this fashion. Things in motion tend to stay in motion unless acted on by an outside force. It's laws of physics. They apply in trading just like anywhere else. Everybody knows that. Okay. Let's go take a quick peek at what is going on. I don't think we have any news today, actually. Here's the economic calendar. Okay, so there's no economic news scheduled for Monday. Tomorrow, consumer confidence expected to dip a little bit, but staying near 100 is fine. Job openings expected to dip from 8.1 million to 8 million. But one of the things I've been showing, I've been telling you I'm going to find this chart. Come on, job openings. I had you up. What's going on? You're embarrassing me in front of my friends. Well, I was going to show that. What it would show you is, wait. Let's see. Okay, yeah, well, I'm not sure why I can't get either one of these to open. What it would have showed you is that back in 2019, we were around 7.5 million. So as the media tells you, we're dropping and these are the lowest levels in 2 years, 3 years. That's because they were post-pandemic years. We're finally moving back into, it's taken this long for the VIX to get down where it was living in this range. We haven't. It's just been slowly, gradually draining, and now we're back down to these low teens. That's a better market. That's a more stable market. The institutions are calm and stable. Everything seems good. Tomorrow, ADP, right? Tomorrow, ADP, we're expecting 168,000. Previous was 150. That's more. Anything above, at or above 150 is sustaining the current labor market. So that looks fine. Wednesday is also the Fed. They will give us the decision. There's no expectations of a change, but then we'll have the press conference. The press conference, we're looking to see, are they giving us verbiage? Are they giving us verbiage? Right? That indicates September is the first cut. Unresponsive exit page. Wait, I don't know what's going on with my internet right now. Okay. Then we have, did I just only lose that one? So strange. Okay. Well, it's employment. Non-farm payrolls is on Friday. Weekly jobless claims. We haven't seen anything in any of those numbers that gives an indication that things are getting worse. If I see it there, then I'm like, oh yeah, but we haven't yet. So, okay. Let's get to the watch list. Questions? What do you think? Am I on the right track? Do you think I've missed something in my assessment? Let me know. Let's go hit the watch list and see how the week is starting across our portfolio. Apple. For me, Apple, the fact that Apple has held on, if it can survive earnings, I would want to trade this if it weren't for earnings. It's a higher high, it's a higher low. The trend looks good. Apple is just a leader in the tech space. Whatever else you hear, Apple is still, 10-11% of the NASDAQ, 6-7% of the S&P. It's an enormous piece of the market. This staying strong while the other components of technology are iffy, this is favorable. Chips don't look good. Some people are like, ooh, they may want to trade that. I have no interest in this. There's earnings. This is in a consolidation right now. I need this to bust up, get at least near the 50. Then I need it to give me a higher low. Anything less than that. When was the last time we saw that? Right there. The whole time this was coming down, it didn't get tradable until what? Well, what I would actually say, let me go back a little. Right here in this consolidation, you can kind of see, and it was around earnings. But it finally popped up, came down, higher low. That's it. And then it did nothing. That would be a hard trade to catch right there. That'd be a hard trade to catch. I actually feel like I'm going to kick AMD out of my list on this because I haven't traded it in a while. And I like other chips better, so why watch it? Now, that's one of the things that we didn't do it much in April, but we did it a lot. And anyone who's with me can attest to this. Back in August, September, October, our watch list changed fundamentally. We started to get rid of things. Boom, that doesn't look great. Pop it out, pop it out. Now, some things will always stay. I'll always watch Apple. I'll always watch Amazon. I'll always watch Bank of America, Citigroup. I'll always watch Costco. Some of these I'll watch all the time, but other ones are going to come on and off. And our watch list will shift. So here is Amazon. I'm going to keep watching it, but it's in consolidation. I need to wait for it to do something more convincing. AXP. So the financials, they've pulled back. They're starting to give signals, but there's a little pause today. All right, that's fine. I'm still looking for signals. I like BAC, and BAC hasn't given it yet. It looks very close. It's pinching. AXP was a little early. I looked at that, but didn't take it Friday, so I'm not going to take it now because I'm already waiting for a signal here on Bank of America. BLDR gave a signal. It's still valid. We took one on Fastenal, F-A-S-T. Citigroup turned. It's valid. It's a red candle today, but this signal is still valid. If you wanted to enter, it is a valid entry for Citi. Caterpillar turned. So you can see we had those breakouts right through here. It broke out. Whoops, new high. Higher low. That's a valid signal. Just because it's a red candle right now, that doesn't mean anything. It actually means that if you didn't get it, you can get a better price now than you got on Friday, thinking the signal's valid. If you think that invalidates the trade, if you're thinking to yourself, if I took that Caterpillar trade, I would be closing it right now on this red candle. Please, please, please reconsider that mindset. Right? That's not how the market works. We can't function that way. A funny thing, recently we talked about the transition from paper trading to live trading and how people struggle with that. And I'll tell you the number one difference between people who succeed on paper trading and then don't succeed in papering, or succeed in trading, what are they doing differently, do you think? Well, they're taking their eye off of it. on paper. Like on paper, they're leaving it alone and it's like, okay, like relax, and they don't watch it. In fact, sometimes they don't watch it for a few days and they end up with a trade that like, oh, I didn't even do anything and it turned around. You're not going to do that when you have live money on. When you have live money on, you're going to look at it and then look at it and then, but I should look at it again. You've changed the cadence. You've changed how you see it, how you look at it, how frequently you look at it, right? Whatever we're doing on paper, we should be replicating. Like, well, do you look at it now? I watch the opening range. I don't make decisions. I'm not like, oh, what I should do. I'm watching the opening range. It's the first 20 minutes. We're just kind of seeing what's happening here. Then we're going to watch the day. I'm not going to know anything until the end of today, right? That's just, unless like all of a sudden catastrophic selling started happening, then maybe we would know something. CCL, oops. CCL. Looks like it's going to hold the 50, but man, it got a little choppy. Like this trade back here. This trade was great. We took this trade. That was an alert. And then, I don't know, maybe. Oh, no, that was CCL. That was CCL. We took this trade. CL. We took this. No, it didn't. This one bounced as well, and now we had earnings, so I can't do anything with this for now. Yeah, we got this one back here, rode as long as we could. Chipotle waiting for a break, still in consolidation. Oil, we'll see. ConocoPhillips is down. I did take an off-cycle XLE trade. We'll see how that looks. Costco, not yet. I need Costco. So Costco for me is there. It's got to do this. Anything less than that, I'm not even going to bother. CSX looks pretty good. There's some industrials. That continues to go. Carvana, same thing, but not much time. So that's one we looked at from consumer, but just didn't give it much time. Fastenal, yeah, still moving. Looks pretty good. Looking to gain some momentum there. GBTC, Bitcoin up a little bit. Gold up a little bit. GM, I got rid of Ford from my list because it got battered on earnings. GM, I'm still going to watch, but yeah, it's not doing great. None of these, Google's up today. None of these have done enough for me to be interested. Google has a lot of work to do to get back in good graces, right? Home Depot, there was a consumer that looks okay still. Small caps just pausing. Small caps and home builders are basically moving side by side. Why? Because they're both highly influenced by interest rate speculations. Coca-Cola, like I said, that caught me off guard. We traded Coke a little bit earlier. Yeah, okay. Meta, not enough. MFC, I'm getting ready to kick off my list. Yeah, it's gone. Just hasn't done anything. MMM got crazy strong on earnings. Now it's starting to pull back a little bit. Morgan Stanley gave a little bit of a hiccup here. We'll see what's going on with this. The financials, Microsoft, you can see it's in a consolidation. Now, here's the deal. We went from 468 to 420. So that's a 48-point drop on a $470 stock. So that's basically 10%. From here to here, that was 10%. That is a correction. From 430 to 390, that was 40 points on a 43. That was about 9.5% right there. So can we pop out of this? Very similar to the way we popped out of that one. Yeah. Yeah, but I'm still going to wait for a little bit more confirmation because I can. I don't have to be like, oh, let's call the bottom. There's no need for that. Micron. So what does this mean? It means we don't have a lot to trade right now. We've got a couple of trades on, but we're waiting. It's going to be less trading, as it should be. An easy mechanism for your risk management. I'll show it to you in just a minute as we get closer. Netflix is in consolidation. I want you to look at how many stocks on our list are now showing this type of a pattern right here. Okay, great. Nvidia, same thing. Palantir is the one that's not, but it's the only one, and it's got earnings soon. So we're waiting for the cues to pop out of this, just like we went. And you can see last time when it happened, it was like this, then like this, up, down, boom, right there. We don't have to call this choppy bottom. We can wait and catch the next move. That gave us this move. Then it pulled back. Then it gave you this move. Then it pulled back and it gave this move, right? So you can see after this type of a move, you got 3 bullish windows after this 5% consolidation. Now we had another one, and what are we thinking? Well, I'd love to get 3 windows. Maybe 4 windows. Maybe this takes me all the way through the Santa rally. That would be fantastic. I think we would all appreciate that. That's good trading. SPY is holding up today, but we're looking to see what this bounce looks like. Here's a consumer stock, still waiting. I'm not expecting a lot of new signals yet. Maybe if it starts to turn from here more bullishly, you get a signal to catch a financial trade. Other than that, we're just kind of watching. Here's the dollar. Ooh, we don't love this. Right? We had seen the dollar coming down. We wanted it to stay underneath here, and now it didn't. Now, is it catastrophic? No. But it's not ideal by any stretch. Here's the VIX. Okay, so again, the VIX is definitely shown some escalation. We really haven't gotten above 18, though, and that's important to think about. So, okay. Walmart. I think Walmart looks great. I think a new trade could be showing up here. It's below this trend, but still above the I'm going to move this down to here like that. Yeah. If it comes down, I would expect that it could just bounce back into this slightly lower channel. Just a little adjustment, a little pricing adjustment. That's all it's doing. And let's look at the XLs real quickly. Materials, okay. Pausing a little. Communication services. It needs more than it's given. It needs more than this. It needs a couple extra days, and then it needs this, and then I'd be like, okay, it shook it off. But I'm still looking for that to possibly happen. Very much like it did last time, right? Very much like this. This one kind of did a V. Boom, boom. You see that? It didn't give you that second move like the other parts of technology did. That's why we have to think about that. Energy. Ooh, energy is hiccuping right now. Okay. I mean, look, if we're going to see bullishness on the market, I would expect that oil pulls back a little bit. I'm not done with my trade yet. But I will definitely be, let's see where my stop is going to end up. But I will actually move my stop to carry it. So I'm going to move my stop probably to just underneath here for tomorrow. So basically what'll happen on my trade is if tomorrow it regains momentum, great. If it doesn't, I'm out and I lose and I reduce any amount of loss. Financials look fine, actually. And this, if you look at your Heiken Ashi, it tells you we can survive this, no problem. Right now, it's a little bit iffy from the standard candle. It's red. We're a little bit like, oh, what's going on? But look where we think the money is. Financials, industrials, not technology. A little bit of consumer here. A little bit of utilities. A little bit of healthcare. Okay, that's where we're at. We should be a little more cautious now than we have been over the last couple of months. Our posture's now dropped for the second straight week. We're in what we think is as of now likely to be a consolidation. I'm looking for that. I'm looking to trade as it moves out of the consolidation. But I'm also 100% wary of the fact that it could still turn worse. I think that the Fed is ready to cut rates. Don't fight the Fed. Yeah, I think we're going to stay bullish. That's my story, and I'm sticking to it. Questions, comments, or concerns? The steel stock press? Is that what you meant? I'm in a Walmart spread trade. Too late to get into fast? No, I don't think so. It's barely above. Look at the original signal. Press, I think you're still okay. New stop on XLE. Yes, XLE. I'm going to put mine to... I'm going to move mine to... Now, I'm going to leave it alone for now. You can actually, if you notice, it really doesn't have a lot of selling pressure. But I would say, where are we at? 91.26. At the end of today, I'm going to move my stop to... I would say 95. I'm trying to think, what was the stop on that? I don't remember offhand. Let me take a quick peek. 90.25. Yeah, I'm probably going to... No. Stop was 91.05. Oh, no. The stop's fine. The stop's at 91.05. It's fine where it is. Yeah. I'm going to leave it. It's fine where it is. It's controlled. This was actually like a 3.5 to 1 because it was a pretty tight stop. I was looking for one of these momentum moves right here. And the fact that, like, I don't want to sit in this trade if it's going to turn. So, yeah, I'm actually comfortable with that stop. Okay. Record keeping. That's the section of the trading plan we're on. If you don't have a log, go download ours. It does a lot of work for you. We'll walk through the log in one of either Tuesday or Thursday's foundations this week. We'll walk through the log and the trading plan. We haven't done that in a little while as a group, so we'll walk through both of those in my sections. But just start doing it. I would recommend, at the very minimal, if you have it, to go back 25 trades. Go back 25 trades. Your last 25 trades up until now. You will learn so much by logging and seeing those 25 trades. If you have more, keep going back. Like if you can go back and get 100 trades and get a full log, they log 100 at a time. I would get a full log and be like, what can I learn from this before I go forward? So much information, so much value in the record keeping and what it tells us. Okay, that's it. Let me go back to where I can see. Yes. Why is there a second? Yes. There's a second set of exits. So that you can, if you sell half and then sell another half. In fact, there's actually another spreadsheet that Steven put together I need to post for anyone who happens to exit 3 times. Right? You might sell and then carry. So if you scale out of trades, you want to log it all as one trade, because that way you can see, hey, wait a second. If I keep giving back money on the second part of my scale, I should stop doing it and just sell all of it at the first target. Those are the kinds of things that we look for. Thank you, Stephen, for the call out. Tonight, we have the cocktail hour. This is a non-recorded. Some people are like, are you recording this? Because we might curse or say something not like offensive, but you know. That starts tonight at 8:30 p.m. Eastern. I'd love to see everyone there as well. Come hang out with us, chit chat, just get to know each other. It makes it easier to interact together. Other than that, it's great to see everyone. I hope you have a great rest of your day. Hopefully, I'll see you tonight. Otherwise, the schedule is in the calendar. And as always, happy trading.